Our market guest, Basant Maheshwari, founder of the Equity Desk and author of The Thoughtful Investor, now joins us from Kolkata, part of our Inside Kolkata series. Basant, good morning. Good to have you on the show. The first question really is, what kind of market are we in right now? All through this year, it was a bottom-up market. The Nifty didn't do much, and we saw a lot of stocks do so well. But over the last 2 months or so, we've seen quite a bit of correction, even in the Nifty and the large cap names. Do you think some signs of this market approaching top-down levels has appeared, or is it still a bottom-up market in which you'll have to really go down to individual stocks?
Thank you for having me. Anuj, the first thing is, it's always a stock pickers market. I mean, there are very brief phases in a market where it becomes an overall market-dominated, sector-dominated theme, but it's generally a stock pickers market. Tops and bottoms are made by the emotions of the participants and not by the numbers on a balance sheet. So we can always argue we are at 15 times FY17, 13 times FY17, and 17 times FY17. But for those 2 points movement on the Nifty, it's a 1,000-point move. So we can't take that. So actually, I think at this time, we have to go back and understand what's happening. I think there are two things which are going to happen in the global monetary setup as far as an Indian is concerned. First is the Fed is going to increase rates over a 6 to 9 month period. Whether they do it in 1 month, 3 months, 6 months, that's another issue. But over the next 6 to 9 months, this is going to happen. Second, the RBI is going to decrease rates. Both of these are dollar bullish. You cannot dispute that with the Fed increasing rates or the RBI decreasing rates, I mean, the dollar is going to have a rally against everything. It's always been rallying that way. So when there's so much of shelling around, what do? You don't go out saying that I'm brave and I want to buy the stock which has fallen 80% from the top. You have to take a somersault back into your sand bunker and hide behind the places where you think that your company would still grow. So over in this phase, I mean, we're all eternal bulls, you know, so I never say it's a bear market. I always say we are in a bearish phase. But the market is very, very dichotomized. There are just a few sectors, a handful of sectors that I think should do well. I think we're back to the place where the autopilot, roller skates, NBFCs and the consumer would do okay. That's okay. And the small cap pharma and the mid cap pharma should do extraordinarily well. That's my sense on it. Because one, because of the dollar thing, and the other because you don't see any improvement in the macroeconomic number, leave the macroeconomic number. Even the companies aren't telling you of anything improving. So what we do as an analyst, we say, the second half of this year should be better. First quarter of that year should be better. Actually, we don't know what is going to be better and what is not going to be better. So just because we can't say that I can't see anything happening for the next 9 months, we say we keep deferring the recovery. So one thing is for certain, the hype of the Modi government is gone, and now just the hope remains.
Okay. Mr. Maheshwari, hi, good to see you in today. In the past, you've expressed your interest in stocks such as Granules India, and that's from the small to mid-cap pharma space. What is interesting you now, or if you can't talk about stocks within small and mid-cap pharma stocks, what should investors or stock pickers look out for in terms of key parameters in order to make that choice? And the reason I ask is that today we have Elder Pharma, which is suffering from the debt problems that we've been talking about. But on the other hand, we have something like a Vivimed Labs, which is gaining on the back of maybe some amount of restructuring of their specialty chemicals business. So how do you choose?
Now, there are two ways to play this. One is the CRAMS business, which is the autopilot mode again. And the other way, you'll have to know if the dollar appreciates. Then normally we say IT will do well and pharma will do well. But in IT, the job that Infosys can do can always be outsourced to TCS if Infosys tries to quote something higher. If TCS doesn't do it, then HCL Tech can come in with a lower bid. But in the pharma space, what Cadila does, Torrent cannot do it. What Torrent does, Lupin cannot do it. What Lupin does, Sun cannot do it. So that's for the big part. For the small B2B space, there are companies, how do we look at it? I mean, just about $86 billion drugs going off patent. And as a pharma person who studies pharma so well, you would know more on this about me. So when drugs go off patent, the price falls 80%, 90%, and then what happens when the price falls? The volumes explode. So when the volumes explode, you have to look at the niche API producers, the guys who are doing this niche API things, not the normal general generic bulk drug stuff. So you get small caps and mid caps there. But in that space also, those companies have to show us a history of having grown in the past, or they have to show us a catalyst as to what will change. We just cannot go and buy any 200, 400, 500, 1,000 crore market cap company and then pray to God that something good should happen to my company. So if there is a small history, then it's okay. If there is a catalyst that's happening, then also it's okay. How do we look at the catalyst? If the company is getting into those APIs whose products are going off patents, and then obviously then they'll do a little better than the others, and that's one way of playing it. I wouldn't like to comment on granules, because I have an interest there, and I recommended it last time, but it's gone up a little bit from there. But in this space, in the B2B space, there are companies which we can buy, and we can spread it across, and then see what happens. But on a broader perspective, if you just look at it, how it happens, I think the CRAMS business is about, globally, about the top 50 pharma companies spent about $60 billion in research last year. So not even a big percentage of that is outsourced. Out of preclinical trials, I think $10 to $12 billion is spent every year. Not anything is not outsourced. A very small percentage, I think half percent or whatever. I don't remember the exact number. So that's a good business to be in. Even in that space, there are two types of CRAMS businesses. One is where you put in more people and you get the job done, like the IT offshoring thing, which Syngene is doing. And then there are some other places where a molecule moves from phase 1 to phase 2 and from phase 2 to phase 3. So that gives you exponential return. So that's where you can take your pick there.
Okay. Basant, last time you spoke to us, you said that NBFCs, was a sector which was a blind buy for you. Does it still remain the case? Because we have seen, in a couple of stocks, we have seen a bit of a rally, but in a couple of stocks, we have seen some correction as well. And is there anything in particular that you like in the NBFC space?
I like the housing finance space, as you know, pretty well. But over the last 2-3 months, my personal portfolio has also seen a shift. I've tried to diversify, not diversify in a very broad sense, but diversify in the sense that when you have to buy new stocks, you got to sell something that you actually own. And creative destruction is a fantastic form of investing, because something that's so close to you has to go out someday. It's like, it's like sending your daughter away from after marriage, but it has to be done. So that's how it is. Because when you buy new stocks, you need the cash. So, but out of this NBFC space and also the consumer space, broadly I'm intact. But you have to take some money off and you have to redistribute. But for a normal investor, I think he makes 8% pre-tax FD. Even if he makes 16% CAGR on HDFC Limited, for which you don't need an analyst, you don't need me, you don't need a channel, you don't need anybody, you just has to go and buy the stock. 16% pre-tax, post-tax on HDFC Limited is always better than doing an 8% pre-tax. So I think the first thing that an investor should do is to understand that he should not be you should not be really worried about these things, because these macro events, see, the why of all macro is very easy to say. The when is worth a million. So everybody knew China was going to slow down. Everybody knew that this was going to happen, but nobody knew when it's going to happen. So I think that's the space to be, where you can see certainty and surety. So that's how I am placed personally. But obviously, housing finance, NBFCs, I am very bullish there.
Okay. Do you see certainty and surety in the private banking space, Mr. Maheshwari? And if so, which ones would they be? And I actually have to ask you this question. If you had to choose between Kotak and HDFC Bank, because if you look at Kotak, it's outperformed HDFC Bank in the past 2 years in terms of its stock performance, which one would it be?
That's a very tough one. Off late, I don't own either of them, so I can tell you.
Okay.
I think if you're a little enterprising, it should be Kotak. But if you are a little risk averse, it should be HDFC Bank, because Kotak is doing a lot of interesting things around. By buying ING Vesa, they've increased their branch network all across South India, where Kotak wasn't present. So it would take 6 months to 1 year for them to get this thing done. So once you increase your branch network, then it's like I'll give you a small sense here. No matter how much we talk about the PSU banks and about the Indradhanush, but the cloudburst happened just after the Indradhanush. So you cannot bet there. The only place left is the private banks. So with Kotak coming back to the entire thing, with the ING merger happening right now, it would take 6 to 9 months for them to get things up in order. And I think once they set it up, Kotak will be back to its own ways of performance. So if you're a little enterprising, if you're a little risk averse, you can buy ING. I don't own either of them, Kotak rather. But if you want to have a nice sleep, then you can buy HDFC Bank. But if your investments are keeping you awake at night in these times, I'd suggest stay awake, but remain invested.
Okay, that's a good point. What about something like a Tata Motors, Basant? There's temptation to buy a stock that's fallen 40% from the peak. But we don't know, whether, there's some more problems in China. We don't know about some other markets. Do you think the risk reward is now baked in, or is it getting favorable now in terms of the kind of returns that you can expect from Tata Motors?
Anuj, you do a brilliant thing every day by hand-holding virtually from the screen. So I think that just buying a stock because it's fallen 40% doesn't make a sense normally. But Tata Motors, you think they should do well, but there's so much of problem around China. And what's the compulsion for you to go and buy only Tata Motors? Obviously, if this China thing hadn't happened, we would have bought Tata Motors, but we wouldn't have got it at this price. So it's more of a risky bet. I think the private banks are safer, they are better. Of course, the recovery in Tata Motors would be faster, but that's how I look at it. I wouldn't actually go about buying anything here and there. Because if you ask me, I think there's too much of uncertainty around the real sectors. You have to take a side and you have to be somewhere else. So that is what I feel.
What about something like a Maruti Suzuki? It's off the year high that we saw, the record highs that we saw. It's marginally hovering around that level. But how much more do you think that it could possibly pick up pace in the next fiscal, or how much is already factored in?
I don't know, but I think Maruti is doing a good job otherwise also. But see, one thing which is happening with the advent of these Ola cabs and the mega cabs, the basic need for a person to own a car diminishes. But the Ola and the mega guys would obviously be buying cars, and they wouldn't be buying a BMW or a Merc to drive you around. So that's one part of it. And the company is doing fair. I think, see, with these kind of companies like a Maruti Suzuki or a ING or a Kotak or HDFC Bank, a large cap portfolio, well constructed, well diversified, for a normal investor, he should be fine and doing well with it. But these are not stocks that are going to go up 2, 3, 4, 5, 7 times over the next 3, 4, 5 years. So he has to take that in his stride, and he has to understand that these are companies which are going to give me 18 to 20% CAGR over extended periods of time. And that's how things should be. But buying Maruti, buying any good company for that matter, doesn't require too much intelligence, but holding them needs too much of patience. That's the problem. Because say if the Fed increases rates 25 basis points or whatever, and then Nifty falls 200 points, I think all that long-term story will go down the drain, because the investor would say, "Nahi, ek aur to bechte hain, niche aur lenge." And nobody has been able to buy at the bottom. I mean, that can't be done. You have to take the pain if you want the gain. I mean, there are no free lunches here. It's a game of odds, and we have to play the odds and stick with it.
Okay, so what are the odds that the market, Basant, will go back not only to the recent lows of 7,500, but maybe even sub 7,000? Because this is the first real big correction of the current bull market. In the last big bull market, we had 2 or 3 big corrections, even 30% corrections. So far, we have had only 15% in the current run. What are the odds that this market will break not just 7,500, but maybe even 7,000?
As you know, I'm not a very big forecaster of Nifty, but let me tell you, corrections in a bull market happen very swiftly, and the recovery is also swift. We don't correct for 8 months. We've been corrected for 8 months now. I mean, from January or whatever. So this is something which doesn't look very good to me, because if you had to correct, you would have corrected from January to March and then recovered back in April. So, of course, being eternal bulls, we'll always say it's a correction in a long-term bull market, and everything is in a bull market if you have a 20-year view or a 10-year view or a 5-year view. Obviously, I'm very bullish.
So would it be?
But what I'm saying is,
so would it be safe to say? Would it be safe to say that we are maybe not in a bull market correction, because it's been so slow and grinding from the month of January and maybe even March? Is it something worse than just being a bull market correction?
I mean, I hate to say it, but I'll have to concur with your view there. So that's why you take your positions away from the market. You move away from the general market. You don't have to own everything that everybody owns. You have to own your niche companies here and there. And then you have to hide behind a sand bunker, as I say, when there's shelling around. You cannot go around wearing a bulletproof jacket and say, no, I'm lucky today, I'm going to catch one of those terrorists around. No, yaar, I mean, it doesn't happen in life. You have to go behind a sand bunker and just sit there quietly and say, I hope my company does well, and hopefully if the dollar goes, see, if the market falls, one thing happens every time is the FIIs sell. When FIIs sell, the dollar goes up. So what do you do when the dollar goes up? The exporters benefit, and in the exporters you look at the sticky guys, the guys who are doing the B2B, the guys who've got some stickiness with the customers around. So that's what you do. I mean, if you tell me that I can see the Nifty going back to 9,000 in this calendar year, I don't know. I mean, you can force me to become a bear, but I am a bull, but market doesn't sound bullish at all. The general market. But in our spaces, we are fine.
Okay, Basant, I think the takeaway is that you need to have a strategic portfolio and you need to stick with it for a longer period of time. Thanks.